In this video, we're providing you a state of the market and stock picks for May 3rd, 2023. So if that sounds like something you're interested in, consider subscribing as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. So, where are we? Where are we? Well, currently, as of right now, what we're dealing with is kind of the aftermath of First Republic. First Republic was essentially delayed about a month until earnings last week, where there was a bunch of fallout. You can tell there was a lot going on behind closed doors because there was just absolutely no news. There'd be some news and then no news. And then all of a sudden, JP Morgan has one of the best deals of their lives, right? And they pick up essentially all the good parts of First Republic and essentially drop all the bad parts of First Republic. And so now that kind of drove a lot of fear today. And there wasn't as many job openings today either. Again, more recession kind of concerns there. But the market started to really dump. The regional banks really, really took a hit. And essentially PNC Bank, right? A big bank. There's a lot of concern about what's going on, and people are really starting to worry about what's going on behind closed doors with the banks. And something that I've talked about and mentioned, Elon Musk essentially said last week that we are already in a mild recession, and with continued rate hikes, essentially that we're going to go into a very deep recession. Now, tomorrow is a big day as we do have new interest rates, and we do have essentially Powell. The rates come out at 2 p.m. Eastern Standard Time, and then you have that followed up by Powell fielding questions. Now, something that's big and the big dump that we've had today, there was a lot of talk about lawmakers essentially saying that the Fed needs to stop, essentially laying on rates. And we will see. Right now, it's projected that interest rates will be raised another 25-point basis move tomorrow. If that changes, that changes a lot of different things. That could mean a pause and may not start laying off rates, but they could potentially pause. Now, this is not something we were really expecting, and something I talked about coming into tomorrow was that for some reason, if something happens, that they could potentially pause. Now, if we pause, that means there's something potentially even bigger going on with the banks than a lot of people are unaware of. Again, the banks have been very eerily quiet on what's been going on. There's a lot of people you don't. There's a lot of banks out there you don't know how bad underwater they are because a lot of these bonds and stuff they hold to maturity that aren't brought to the market could be well under what they have as far as assets are considered. And considering that you came from almost zero interest rates to blowing this thing out of the water all last year with this rapid rate increase, now you got tons of banks that are underwater and they couldn't move fast. If they didn't essentially move fast enough, they essentially are going to get obliterated and fail. And so that's what we're running into with this bigger banking crisis. And we are already starting to see recession. We're getting more people talking about recession. We had meeting notes on the last meeting, although Powell evaded the question when he was fielding questions during the last monetary policy about a mild recession. Again, there was always a soft landing or a no landing. Now it's quote unquote a mild recession. So tomorrow is going to be the big pivotal day on determining, are we going to go another 25? Because if we go another 25, how much more the banks can actually take this? Now, I do believe the Fed is way overshooting this, but they are still trying to get inflation down to 2%. We've been sitting at 5%, over 5% for a very, very long time, or over a year, which is not a good sign. And so they can't just take off rates. And so if we increase rates, remember, Powell has stated many times his battle is with inflation and that we would see pain. He said that in December when everybody got super excited that we were going to pivot and go back to all time highs. We are in that final stage where he will lay another 25-point basis move. I don't know if he will or not, but if he does, he would be essentially sticking to his guns. And we will see what happens. We'll see what else breaks. Now, typically in May is, sell in May and go away because typically liquidity and stuff really dies out, especially after earnings. Uh, Beginning part of May, you have earnings reported. Again, I always talk about the industry leaders report, and then after that, like the market really doesn't care about the rest of the earnings. It's already made up this decision on where the market's headed at that point. So at this point, again, very interesting to see. I wasn't expecting for them to potentially pause tomorrow. I talked about if it was potential that there could be something going on. Now, if the lawmakers are saying that we need to stop raising rates, there's a bigger concern that people aren't talking about. Again, you have to understand that the Fed is not a, uh, a government entity, right? And that it's essentially privately owned, right? And so understand that, and there's a difference. And so if they're saying something, that means they're potentially seeing something that they are concerned about, whether that's through the FDIC or through Treasury Yellen. As Yellen had pointed out the other day, they're also very concerned about the debt ceiling, in that she was concerned that if we didn't, I guess we have less money than they expected, and that we're going to potentially run out in June. Now, with that being said, we are getting even though we just started May, we're very close to June. You have to understand that even if we do come up with a solution and raise a debt ceiling, if we get downgraded, the market can crash. If we get our credit rating gets downgraded, we can crash. It's happened to us before. And so that's the last thing we want. Last thing we want is to default, because then that would really cause a crash. So on top of all the things we talk about, we still have the debt ceiling that is right around the corner. So there was a lot of things I've talked about timing. A lot of these things could potentially lead to a new bottom because of that. And they're lining up very badly. So you got a recession, you got a banking crisis, you got debt ceiling issues, potentially downgrading your credit. There's a lot of different things going on right now that by themselves would crash the market. Now you got like three of them going on simultaneously, three, four of them going on at the same time, that could crash the market. And that's not even including any of the housing stuff or any of those other things that are out there. All the other a lot of job layoffs are going to happen, right? And understand that it's going to get very bad. And I think eventually Q3 will be the worst of it all. I think the market would hit a bottom before, like, we really saw how nasty it got. Because as soon as the market realizes, aka quote unquote, we're in a recession, which could potentially happen tomorrow if Powell talks about it, then the market would price it in. And then at that point, I think the market would go straight for pricing in a, a significant recession. Again, the market can price in some things, but it is about timing, and you have to understand that we didn't price that in, right? Like that, what we were pricing in was essentially pivots. And going back to all-time highs, right? We weren't pricing in a recession because there was no recession last year, right? It was all a soft landing or a no landing. It wasn't going to happen. We weren't going to have a recession, and then now we're actually facing that fact. So again, tomorrow is going to be a big pivotal day. And then backing that up on Thursday after close, you have Apple, which holds a huge part of the index. There's already some really bad numbers that could potentially lead to some really bad numbers for Apple when it comes to China. I think that is one of the biggest concerns, as they are a big source of revenue. Again, they don't hold anything in the cloud either, so that's could be another big continued hit as well. So Apple is very big on Thursday, and then we got non-farms on Friday, which again, if we get sticker shock about showing recessionary type numbers of unemployment, that will essentially, this week could lead to something really, really bad, and it could lead to the start of potentially seeing a new bottom. And so these are the things that I talk about, and these are the things you have to be looking for in the market and realize what's going to have weight. And right now, with the way the current environment is, these are the things that have, and that's not even suggesting that any other banks go under. If more banks go under, that would even add more fuel. So as you can see, all these things, they would essentially line up to where this thing could hit a very nasty bottom. And you have a bunch of people saying, no, no, there's no way it's going to be a bear market. I understand you don't want to talk about the bear market and you're tired of it. I am too, but you need this final stage to play out. You have to let things normalize. Things aren't normalized enough, especially after you printed 40% of the money supply. You have to realize how much of an impact that has. You are living through a very historical time. Every new high and low we get, every new event we get is all very historical that we're going through over the past couple of years since the pandemic has started. So just be mindful of that. So, with all that being said, again, very, very interesting situation that we are currently in. And we find ourselves coming into tomorrow. So, the 2 o'clock, again, will be big. If it comes in at 25, I think the market will still be panicked because of what's going on with the banks. If they come in at a pause, that may be a short bump. I think ultimately what's going to matter tomorrow is what Powell says. And again, what I'm really looking for is if he mentions a recession. That point, the market will take the quote unquote mild recession that he talks about. They will price in worst case scenario of a recession, which means, in my opinion, a new bottom, wherever that is. But we will see. We will go from here, and then we will find out. But tomorrow starts, like I said, the big events, and then we'll go into Apple, and then we'll go into non-farms to finish out the week, and then we got core next week, top of everything. Although this week I don't think core might not have much of an impact unless it starts shooting back up, and then that's you're opening a whole new can of worms again if that happens. Uh, let's look at Bitcoin real quick. Bitcoin's still kind of holding like the markets. Actually, let's go back to SPX. I didn't really talk about the actual technicals on SPX. Like I said today, really hard rejection. Regionals essentially drew this down. Like tech was still holding a lot, at least all the big tech, but a lot of banks were just going down today. And like I said, banks will lead the way, and the rest of the market will follow. Huge downside. We did pull back some today. But if this thing breaks back down below, kind of really watching that 4,100 mark, and then also watching essentially this 40.55 mark tomorrow. If we can break back below that, again, I think we're headed back down to at least the 38. Again, you got speed bumps along the way, but ultimately you're headed for that zone. It's kind of what I'm looking at. This 4200 has been an absolute wall. Again, we don't have enough good positive information for us to just break out of here. If they want to time a pivot, maybe that will push us back up one last attempt to 4200 before we take a nosedive. It really just depends on how everything is, but expect a lot of volatility tomorrow nonetheless. So we're watching those kind of levels tomorrow. Again, something could happen overnight. The market is feeling I think the fear is starting to kick in a little bit. So you have to be very mindful of that. So I wouldn't be surprised if this gaps down. If it goes sideways, that means you got one last attempt to 4,200. Otherwise, this thing is, I think, in my opinion, going to roll over. Let's look at Bitcoin. Bitcoin's been sideways again, waiting on the markets. I don't think this is going to decouple. The 31K mark is what you're looking to break. 25 and lower half is support. I wouldn't be surprised if we hit this and bounce, or potentially come straight down again. If we start pricing in a recession, it could just be full melt mode. Remember, like when the pandemic hit, it was very fearful, and it took about 2 months. Some major selling when that happened. It was limiting down like almost every other day, every other week. Um, do I see that happening here? I think you have a depending on how the events unfold, it could happen. I wouldn't be surprised if we saw a limit down. Again, limit down is very rare, especially on the index. Like you need a huge event like that, but on the same token, you need a huge event like that for the Fed to start cutting rates and laying off. And again, I think ultimately we're leading into a new year in 2024 in which we're going to start quantitative easing again, printing some checks and stuff like that. I think is a very strong possibility for next year. But I think this year, what we need is that essential crash, that new bottom, a price in a recession. And then in reality, the whole situation, things will be bad for a couple of years, but we'll start recovering by next year, I think. But ultimately, we need all this to play out first and then go from there. So, but we'll see what happens with Bitcoin. Tesla is showing some weakness. Again, it got rejected right off of this 165. I kind of really watching that mark to see if it breaks to the upside. Again, it's tightening again here. I think it's just waiting for the next leg down. It's going to need some steam essentially to break through this 152, but when it does, I think we'll be heading down to 140 at that point. Again, it's all depending on the timing of events. If the overall market sentiment's bad, a recession, bank crisis, the market's just going to start rolling. When everything starts rolling together, you don't know where it's going to land. So, again, if it can hit a level and hold that level, then that would tell you that that's the market doesn't see as Tesla going any lower. Again, Tesla did go down to 100 It's really hard to tell if we're going to hit that level or not. It depends on how bad things get. If everything is the timing of everything is really bad, more banks foreclosures, recession, a lot more people getting laid off, more rate hikes, right? That is going to drive a lot of fear and panic. People thought we were getting out of this, and then it took a while for people to realize that no, we're not. And the Fed has been pretty transparent about everything, saying we're going to see pain, and we haven't seen it. People just expect what we saw. We're going to get a little bit of inflation in food and gas, and that's about it. That's not pain for the Fed to stop, right? Pain is a lot more people getting laid off. He has to kill demand um, with a very old tools in which he has. But nonetheless, we'll see what happens there. So get very interesting going forward. Palantir, watching this, I did buy a little bit of this. I'm starting to DCA into this the more it comes down. Started a very small position in this. We'll start DCAing more as it comes down, especially down here at this 608 mark. There is support here. My DCA a little bit here at the 725, and then again down here. Again, anything underneath the 6, I think, is pretty fair game in my opinion until this thing starts going back up. So that's what kind of what I'm watching there. And I really don't expect any upside. It does have earnings coming up here on the 8th, so next week. So just keep that in mind. But we'll go from there. So BA again sideways. This thing is garbage. 220 is break. 195 is also break to the downside. Again, I think it will fall with the market in general. Once the market sentiment changes, I think that will change. Again, 2 gap fills we need to fill. JPM, again, the strongest bank, is rejected. It keeps getting rejected essentially after 145. We'll see when this thing gap fills at least back down to the 127, I think. And like I said, I think if we get if the timing of everything is correct, this thing could break potentially all the way back down to the 110. It's kind of what I'm thinking is going to happen. Again, we'll see about how timing and everything is. You got one, like I've always talked about. You have 2 different perspectives. This utopic perspective, and you have to understand that they're trying not to draw panic. So you're going to continue to remain to have that perspective. This is also why they kind of slowly raise the temperature of the water, and they say soft landing to low landing to mild recession to oh yeah, we're in a recession. So expecting mild recession talk tomorrow. We'll see how that goes. But again, next couple of days are going to be very, very interesting. Going to be a lot of information. Goldman Sachs taking a dive. Wouldn't be surprised if we do a little pump and then dump all the way back down again. Potentially looking for a new low. If it can break the 322, could be looking for down here at the 300 for Goldman Sachs. Bank of America, again, ever since it broke down here, it's just been struggling to do anything. So again, we'll see what happens here. But if it starts selling off even more, we'll see what happens with Bank of America. But now I don't want to make this video too long. Again, there's some good information. There's a lot of information going out, so my videos are being a lot longer. I apologize for that, but I'll only make these longer if necessary. And tomorrow is a very big day, very pivotal day. Again, tomorrow will probably be long, and the day after that will probably be very long as well, just because of everything that's currently going on. So just keep that in mind. But again, as long as you're managing risk, we can do the best that we can in this current market. DCAing is a good possibility, especially if we start diving down. I think this is your last call for DCA before a potential boom cycle. I do believe that will happen. I think that will happen the next year, though. I think this is your complete bust cycle this year. I think you're in the final stage of the bust. That when that happens, that's not saying that the housing industry and stuff like that could be a strong possibility. But again, the thing you're missing for the housing industry is you're missing a massive amount of supply, and something we talked about that could potentially happen if someone like BlackRock or some big institution starts flooding the market with homes. Then you could potentially get that kind of scenario. It's kind of leading to that just because of what's currently going on with the administration and the credit score thing that we've talked about on this channel. So a lot going on. Like I said, there's more than one event that could crash the market, and that's what's scary is we don't typically have more than one event at a time that would crash the market, but we're seeing a lot of it. And so again, it's all about timing. So with that being said, you made it this far. I do appreciate you. Go ahead and drop a like. And until next time, I'll see you guys later.